Hi, good day, guys, and welcome to this week's Elliot Wave Market Analysis webinar. We will be looking at the market for the week ahead. Obviously, today is the 30th of October, 2017. Okay, so I always say that I do not usually give education during these webinars, but I thought I should give a bit of a background. I did a webinar a couple of weeks back, just laying out the corrective structures that you find on the Elliot Wave. So I thought I should go through that again, give a bit more detail so that when you watch this webinar next time, you at least can follow what is going on here. Okay. So before we get into the charts, I just want to show you the 5 corrective structures that we have in the market in the Elliot Wave, under the Elliot Wave theory. Then you can just go and read up how those structures interlink with each other, how you identify them in the market. So here I'm just going to go high level on the corrective structures that you usually find on the market. Okay. So we start with a zigzag. You've got a normal zigzag correction. So every time we start with an impulse, that's the first one, right? So we start with an impulse, and after the impulse, you get a corrective structure. All right, so in this case, you get a zigzag, right? So this is an ABC correction. So it's got an impulse. It can be 1, 2, 3, 4, 5, whatever type of impulse it is, maybe an ending with an ending diagonal, whatever it is, but the correction should always be opposing the impulse. Okay, and this zigzag has got rules. You need to have 5 waves, 3 waves under B, and 5 waves under C. A must be equals to C. Right? If they're not equal, there are fib rules that you can apply to get the estimates of where the validity of the zigzag should be. Okay, so the next one is the flat corrections. The flat corrections are the ones that usually confuse most people. So we've got 3 types of flat corrections. So yes, I'm going to start with the one. Yeah, so this one, okay, I'm just going to label it. It's a zigzag, right? Zigzag. So I'm just going to spend the first 10, 15 minutes explaining these corrections because you find them everywhere in the market. Okay, so that's the zigzag. So now you've got flat correction. So look at the difference between this zigzag and this one here. So you've got a flat correction. It's still an ABC. But this one, I'm calling it a regular flat because it ends around the area of the impulse. At the end of the impulse, does not break the A or just ends it around the area of A. And this one has got 3 subdivisions here, 3 subdivisions here, and 5 subdivisions here. Okay, obviously that is the theory, but practically you find something else as well. So that is a regular flat. So I'm going to call it this one reg flat, regular. Okay, so that is a regular flat. So notice, note all these corrections and see how we apply them in real market charts. Okay, so the next one, just undo that. Next one, I said we've got 3 types of flat corrections. So I'm going to do a second flat correction. So the next one is a flat correction still, right? But this one, unlike the previous one, we do it in such a way that I'm going to have space for the rest. The difference between this one and the previous one is still an ABC. All flat corrections are 3, 3, 5s. Okay, so this one is a running flat. It breaks the top of the impulse, but does not come and break the A. Okay, same scenario. 3, 3, 5. 3, 3, 5. Okay. And lastly, third type of correction. Third type of flat correction, not that type of correction. All right, so this is the next one. So the next time when I'm talking about these flats, you know what I'm talking about. So the last one, last flat correction, this one, you can see there it comes and breaks here, the end of the impulse. And it also comes and breaks the bottom here. So all this giving us a B, C. Right, so this is a running, just call it running flat. Sometimes called a contracting flat. And this one is called an expanding expanding, or Elliot actually called this one an irregular flat, but this flat is so common, calling it irregular is not necessarily quite accurate because it's very common, but it's an expanding flat or an irregular flat. Okay, you can call it either. So what do I mean by 333s? So this is what I mean by 333s. I'm just going to do this here. Get a green color. So I said zigzag has got five subwaves. 5 subwaves. 1, 2, 3, 4, 5. And your B always 3 waves, right? 1, 2, 3. C 5 waves. 1, 2, 3, 4, 5. Right? So all flats are different from the zigzag in that this one has got 5 on A, 3 on B, and 5. So 5, 3, 5. Regular flat, 1, 2, 3. That is the difference. See, this one has got 5 on A, this one has got a 3 on A. So this one is 3, 3, 3. Sorry, 3, 3, 5. 1, 2, 3, 4, 5. Okay? So all the flats are always going to be 3, 3, 1, 2, 3, 4, 5. So always look out for these when I do them on the real chart. 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Okay, so this looks easy when I'm doing it here like this, schematically. So when we get to the chart, it's a different story, right? So to identify this on the chart, it's a bit, that's where people get a lot of challenge identifying this pattern. So here we've identified 1, 2, 3, 4, 5 types of corrective structures. And lastly, the last type of correction is a triangle, okay? So the triangle looks like something like this. I'm gonna try and let me get the MACD off here so I can get a space at the bottom for a triangle. Scenario is still the same. Okay, you get an impulse, and after the impulse, in this case, you get a triangle. And then how does the triangle look? You're gonna have A, not with this color. Just gonna spend 15 minutes going through this. Then you'll see what we look for when you do the charts. All right, so that's impulse, 1, 2, 3, 4, 5. So with the triangle, we call it A, B, C. A, B, C, D, E. Right, so this is the contracting triangle. You've got 3 types of triangles. Okay. Here you get an impulse. It's another type of triangle, but they're all corrections. Only difference with this one is this here, that this one has got a flat top. Okay. And the contracting bottom. And lastly, you got one with a flat bottom and the contracting top. So those are the 3 types of triangles. And that completes all your corrective structures. This is all the corrective structures you can find. So you would see, I'll just complete this quickly. These are all the corrective structures you can find on the Elliot wave theory. All right, so the triangle are always going to be A, B, C, D, E. A, B, C, D, E. A, B, C, D, E. 1, 2, 3, 4, 5. See, all the same. It doesn't matter what type, but the labeling is always going to be the same. A, B, C, D. You just need to know which type of structure you're dealing with. Okay, so these are all the corrections that you can find. So you'll notice that of everything that I've sent here, I never mentioned something like an ascending triangle, a descending triangle, or ascending channel, a falling wedge, or a rising wedge. Those things are not in the Elliot wave theory. They are called something else, but we do not have time to discuss that on this webinar. Okay, so for all these corrective structures, you've got an impulse, and after the correction, you get another impulse. That's how it always works. Impulse, correction, impulse. Here, impulse, correction, impulse. Impulse, correction, impulse. Same. Impulse, correction, impulse. Triangle, correction, impulse. Impulse, correction, impulse. Impulse, correction, impulse. 1, 2, 3, 4, 5, 6, 7. 7 types of corrections. And all these corrections have got specific rules that you need to follow in order to apply them, in order for them to be valid. Okay? So these are all the corrections. All of them are not the Elliot wave theory. Okay? But you need to know where to find them, how they interlink with each other to form larger degree patterns. Okay, so because this video is recorded, I'm going to move on quickly and clear everything. You can pause the screen and check out all these types of corrections. Any Elliot wave book that you'll find on the internet, you'll find them explaining these patterns like this. This is all free on the internet. This is not a secret. These are all the patterns that you find. But the challenge comes when you have to identify them on a real chart. Okay, so I've gone through about 12 minutes now discussing this. So lastly, under the corrective structures, I'm going to clear all of them now. All these corrections that I've discussed, I'm just going to mention one here. All of these corrections, they can interlink with each other. You can get a combination of any of all those corrections that I've discussed there. Okay. So, for example, if you've got an impulse like that, today's market is a bit different. You don't just get it an impulse straightforward like that, and then after that you get an impulse like that. No, it doesn't. Most of the time, like 8 out of 10 times, you'll find that these corrections are in combination with each other. Okay, for example, you get an impulse and then you get this zigzag. Okay, after the zigzag, you'll find something like this. You get another correction, but this correction, the significance about this correction is that it is in the same direction of the prevailing trend. Okay, so these ones that are always in the same direction of the trend, we always call them an X. It's a connector. All right, and then you get notice now what I'm going to do here. I'm going to do a flat correction. Just look how different this correction is from the zigzag. You can see this one comes to the top and to the bottom of this. Okay, so I've essentially got 2 corrections here. That is a W, that is a X, and then a Y. So this X is a zigzag, you can see. It's just connecting the 2 corrections. This is a zigzag, here's a regular flat that we've discussed. And then you can have as much as 3 corrections. Okay? W, X, Y. We could also call this one another X because it's, again, going in the same direction as the impulse. Remember what we're correcting here is this impulse. And then after that, you can get something else. You can get something like this here. Let's do this one here. Let's do this. After that, you get something like that. Something like that. In red. 1, 2, 3, 4, 5. This is your A, B, C. A, B, C, D, E. Then essentially you've got 4, excuse me. Essentially you've got 3 corrections here combined with the connectors. 1 is a zigzag. 1, 2 is a regular flat, and the 3 is a triangle. After this, the only direction is, we can only get one direction here, and that direction is to the prevailing direction of the impulse. This is what we were correcting all along with all this. How many times have you seen a chart looking something like this? It just looks like a mess. Even this looks like a mess, but now because you've seen the rationale behind these corrections, you understand, but it doesn't look as messy as before. So now you've got this correction, it is combined by this X, this regular flat, connected by this X, and then a triangle. So you can have any of them. You can have a zigzag here, you can have a zigzag triangle there, a flat correction there, and a flat correction there, or just zigzags being connected by zigzags, or zigzags connected by triangles. Any of them you can have. And that they need to comply to the rules that we apply. Okay, so that is how you apply the theory. Okay, I hope you learned something. Thought I should spend this first 15 minutes explaining this so that you can at least have an idea when we do the real charts. Okay, so now let us go into the charts. Let's go to the charts now. We'll start with the dollar index. Remember all those corrections. We're going to be talking about them a lot when we start talking about the market now, when we do market analysis. All right, so this is the DXY. Let's put up the labeling up. So the DXY has broken up out of this channel, which I was still thinking that it's going to be a wave A. Okay, so this is the 4-hour chart. Let me just go to the daily first. Daily time frame. So you can see here, I'm not going to go through the whole higher time frame. I'm just going to focus on this thing. If you want to look at the rationale behind the higher time frame, you can watch the previous webinar. So here I've got an impulsive 1, 2, 3, 4, 5 in red that I was anticipating here. Okay, so this could change. This could actually have changed the structure, because this is what I thought initially. Thought that this is going to be a wave 4. All right. You'll see how clear this structure is when you look at Euro US dollar, because Euro US dollar is it's an exact inverse of this one. So this is looking much more like a wave 4. All right. So after this wave 4, if this one is completed, this is what you need, what would we be expecting of the dollar. So we'll anticipate that it will drop. After dropping, giving us a correction, if it gives us a correction like this, then we're going all the way down to complete this wave 5. Remember, we're still short of wave 5, that it will be completing the wave A. Okay, so that's how we're looking at this now. So after this wave A, and then obviously B, C, but that is all long term. So this is what we'll be looking at on the dollar index. Alternatively, if this has actually completed and this is actually wave 5, which we can do the alternative count. So this is another possibility on the dollar index. Remember here, I'm on the daily time frame. If it starts doing this, I'm going to do it with yellow. I prefer the yellow color. If it starts doing this here, giving us a flag, then there's still we'll still see more strength on the dollar in the days ahead. Okay, and then we'll have to do the recount and label this. Euro US dollar, which is the inverse of that, is got a more clearer structure. All right, so if you looked on the dollar index, I had the 1, 2, 3, 4, 5 in red, and this side I've got it in yellow. It's still the same degree. I just used the different color. Okay, so I still have 1, 2, 3, 4 here. This is still wave 4, and we still want to get wave 5 going up. Okay, so remember dollar index, wave 5 going down, and here we're looking for wave 5 going up. Okay, they are the inverse of each other like that. So here I'm anticipating what I said last week here on this pair. I'm going to go to the 4-hour. I said this is what I expected. We've got a 1, 2, 3 here. Maybe if I just go to the 4-hour time frame, so you can see exactly what I meant, and it is playing out exactly as we said it's going to happen last week. Okay, but it's okay. Let's look at this one. So this is wave 3. Anything here is a correction of wave 4. We're correcting into wave 4. All right, so what do we have here? What we have here is wave 3, and then we need to get this correction. So here we had this corrective structure, W like that. Remember the corrections that we discussed? Here is one. This one breaks both sides. The one that breaks both sides is a expanding flat. That's what we have here. We've got an expanding flat, and then this expanding flat. So we'll expect that this correction will do something like this. So we're gonna have something like this, and all this is a 1, 2, 3. This higher time frame will look like a zigzag. The question now is whether this is completed to the downside or not. let's check if it is completed. If we go down to the 1 hour time frame, let's clear all that. Let's go to the 1 hour to get confirmation whether this is going up or not. You can see this is where we are. Okay, let me just take off all these lines here. There's a reason why I was drawing these lines, and I'll explain to you now. Okay. And this is not a support or resistance line because I do not trade that. All right. So this is what is confirming to me that we are going to get this. We're going to get a WXY like that. And I'm anticipating that this, because of a zigzag rule, should be equal. Are they equal right now? Let's check. Right, let's check if they are equal and how far that still needs to go before we can start looking at a buy. So this is the first swing. If we just extrapolate there, our 4 should end around this area. Okay, so then that will give us a clear 1, 2, 3 waves to here. And we'll be looking to see what price action will do in this area. And most likely, that is where we anticipate that wave 5 will start. The wave 5 in yellow in this case. Right now, what is it doing? It is giving us a flag. And when it gives us a flag, it's showing us that it still has to get one more move down. So here, it's giving us a nice 1 hour flag. So here, you can sell a break of this flag, targeting that area. Let me just give you that area again, what the area is. Just give you that area that we'll be targeting. Oh yeah, the area is around 1,150. Around that area, then that's where we're gonna start looking for buys under Euro US dollar. So the reason why I had this line is just I was showing somebody else how they do this head and shoulders thing, how they trade it, head and shoulders. And you can see here, those support and resistance traders will say that this is a nice head and shoulder, and TradingView is pre-populated with the head and shoulders. You can see here, this will be the left shoulder, your head, right? That's your head, and that's your right shoulder. Okay, and your right shoulder has broken down, and then it will be going for a retest. That's what some of you have learned. So it is actually confirming that as well, right? Even though that is not my system, I was just showing how this system can fit into each other perfectly. So this one is a nice head and shoulder, broken what you will call a neckline, right? And then after a retest, you expect that you will go down. But how far will you go down? According to the head and shoulders, you're supposed to go down a length that is equal to the head, somewhere down there. Okay, but I do not think we're going to go that far. Okay, so but it doesn't matter what I think. We'll see how the trade comes out. For now, if you get this trade, if you get the breakout of that flag, take the sell. Okay. Right, if you get a breakout here, you take this sell here. Maybe it will keep crawling. Let's do this. Switch it on. Maybe it might keep crawling all the way up to this area. And then we go down to complete the wave 4. Right after wave 4 is complete, then we're going to start looking for upside. We'll check divergence and see how it goes. All right, so that is the dollar index and the Euro US dollar. Okay, so next one that is interesting. I want us to discuss US dollar JPY. It's got a very interesting, this US dollar JPY. So remember what we said about US dollar and the dollar index and look at what we do with the USD JPY. We should not get too excited with this pair with a sell because there's an alternative scenario with this. I know most people are looking to sell this one all the way down. Okay, if the sell plays out the way we anticipate, then that's fine. We'll take it like that, but there's an alternative here that it could do. All right, so switch off everything here. All right, so just to go on the higher time frame on the US dollar JPY, this is the structure that we've been looking at for a long time. I think ever since I started this webinar, I've been discussing this one. So you can see here we've got an impulse. Got an impulsive wave there. After the impulsive wave, let's change the color. You get a zigzag. Okay, after you get a zigzag, you get a X, which is a connector. See here, right? So then the correction continues again. It looked like we were getting a second correction here, and we thought we were going to get something like this and like this, but it's not playing out like that. But that doesn't matter. The structure still doesn't change. If you look here, this is the top of the impulse. In this case, that is being corrected currently. And this is exactly almost right at the top. You can see here. Okay, so if that is at the top there, this is a possibility. I think I explained this last week as well. There's a possibility that you're getting a regular flat. Can be expanding if it breaks a bit up to the upside and then come down. Maybe give us an expanding, either expanding or a running flat that can end somewhere here without breaking the bottom. But we're most inclined to an expanding flat. Okay, so we know it wants to go down, but will it go down immediately? So here's the alternative, and why we're saying we must be careful before we just sell it on the surface, because most of the time the market doesn't do the obvious. Okay, so I will only be interested in this one. I'll show you now. Right, so you can see that it is breaking this channel. Remember, on all the corrective structures that I spoke about, I never spoke about a channel. That's because it is not there on the Elliot wave theory. So here we had the impulse, and we got this correction. We got this correction here. Right, so here we're getting another impulse here. All right, so now we're getting something like, looks like a correction on the lower time frame. Look at this one here. 1, 2. Okay, what if this, you can see here, this comes and breaks the top. This is the A, supposed to be the A, B, C. A, B, where will C end? So there's a possibility that this can just come here and take the A, and then after taking the A, we continue with the impulse before we go down. Okay, so this is a possibility. There's a possibility that you get this move to the upside first. But how will you know how to trade this? For now, I'm not gonna rush into the sell on this pair. This is what I'm gonna do. So you can see here, there's a strong candle to the downside. I don't trade candles here either. So you've got a strong candle to the downside. The only thing that will confirm to me that we are ready to go down all the way is if I get something like a flag like this here. Then I know we're ready to go. Chances are that you may get, as soon as it touches this line, this can reverse with a strong impulse. Maybe not that fast, but it can reverse with a strong impulse. And if it does that and give us a flag like this, we know that we're going to get one more up. Okay, but this blue line is the critical level. That is where the impulse ends. Here is this one here. Okay, so that's why you need to be very careful of just going with the obvious. How many times have you found a trade that was so sure, but you lost it and it never did what you wanted it to do? And then after a couple of hours, days, depending on the time frame you're trading, it goes exactly the direction you were anticipating. It's because of exactly this. The market does not move in a straight line. Nice expanding flat here, does something like this. Get that, and that gives you 1, 2, 3. Okay, before we turn down, you will see under New Zealand US dollar, we had exactly something like this. Okay, so do not rush into US dollar JPY. This, you don't worry about this, missing these pips. This is a very small These pips are very small compared to what you would get to the downside. Okay, and added to that, your risk, your trade will be more probable now. You'll have more chances of winning it than if you're just picking up the top like that. Okay, so let's see what this pattern plays out like, and before we actually take the US dollar JPY trade. Okay, so the other reason why we should not be quick to sell this one, and I know the divergence is telling us that this is diverging to the downside. So another reason is that the euro currently, as we've discussed on the 1 hour, it was giving us this flag. Okay, so if the euro is doing this, expect JPY to do this up side. And this one, Euro USD, EU, is going to complete that small leg to complete that zigzag. And this one will just come here, tag here. It will still be valid, even if it crosses it, because it's now going to make an expanding flat. Okay, but if it goes all the way, then we will change the structure. But we're gonna be on the right direction of the trade either way. Okay. So if EU goes down to that area we spoke about and start reversing, this one will be coming this side and start going down like that. Okay. So that's how we're looking at this. So I'm just going to end the divergence here. Just check the indicator, because this trade is checking all the boxes, but I'm just worried about the pattern. I'm just worried about that pattern that could play out as well. MACD for C, just want to put on my MACD there. Okay, there it is. So you can see there's a strong divergence there on the 4 hour, and that divergence is also there on the daily time frame as well. See here, it's going down. Indicator, I mean, the price here is making higher highs, higher highs, higher highs. Indicator is just doing the opposite. Look at here. Okay, from here, they were all going together, but until here, started diverging. Price keeps going up, indicator keeps going down. Here, on the daily, if you go on the daily, you'll be seeing this from here to this new high. This one is from here to this new low. Okay, so it's checking out all the boxes, but maybe just not yet. Okay, so keep an eye on it. That's US dollar JPY. Right, so next one is New Zealand US dollar. This one is changing the structure, and I'm going to show you just how we adjust. Because if you saw the last webinar, and when I was analyzing this, I made sure that I do not change the previous analysis so that you can see what I was looking at before. Okay, so this is the previous analysis. Maybe if I go a bit to the daily, you'll see why. And I'm going to adjust with you here while you're watching and see how we adjust. Because what we do here is just to speculate how the patterns are going to play out. It's like putting up pieces of a puzzle. Okay, the puzzle is easiest when there's only a few pieces to add. So that's what we try to do here. We try to add the pieces of the puzzle until there's only a few to add. So here, this is what I anticipated. We had this big impulse, long-term impulse from way back here. Let's just clean the screen a bit. Get the color. So we've had this impulse here from way back. Let's clean it out a bit. Let's clean out. Okay. Right. I'm keeping it for a reason. This was the original analysis, which has now changed. Right. So the impulse, and then we get the A, B. This is what I was anticipating that we're going to get an A. Let's do that. Impulse, and then an A, this one, and then a B, and then we were anticipating a C. Okay, the bias still hasn't changed. Okay, so I was anticipating that we're going to have this being equals to that. So we were anticipating that we're going to get some sort of a pattern here, like a Gatli. Then we go. Same thing that has happened here. We're trading this fractically. So we thought that it was going to go exactly the same. See here, it was looking like it was going to go exactly the same. But this is how this structure has changed now. And this is how you adjust it. This is how easy it is. Once you've got the whole wave count of a pair, the only thing that you do as it unfolds is just to come and adjust. So what I'm seeing here is that I've got an A, I've got a B. But I see that this is still continuing. This B is still continuing as something else. So I'm just going to move this from here to there. Why am I doing this? Because I'm seeing that I've got this A here, and I'm getting what looks like this. And I'm getting what looks like an expanding flat. You see the red is an expanding flat. Okay, what should I get after an expanding flat? Oh, this is a regular flat if it ends here around this area. Okay, currently this is exactly where the market is now, where the price is. So this could be the possibility. You've got an A, you've got a expanding flat in the middle, and then we carry on with the impulse. And that impulse most likely should be almost the same size as that. But there's nothing that stops this from breaking down even more, a little bit more. Nothing that stops it from that. It will not change the pattern. It will just change the type of correction. If it ends here, it's a regular flat. Here it has already broken the top. Here it's already at this level, so we anticipate that it may break slightly. So support and resistance traders will think that now, okay, we've broken the major zone, and now we want to go down, okay, all the way down. It may not happen like that. It may just do this pattern. This is how the market fools us most of the time. But if you know and understand this pattern, you will see that this is a possibility. Okay, and it's always good to anticipate these things when they happen. So whenever there's changes, you know what to switch on to. So how will you know what it's gonna do? Same thing that we've always been doing. So if I'm on a daily time frame here now. If you go to the lower time frame and you start getting something like this, then you know that we're gonna carry on down. Okay, but at the moment, not even divergence. There's not even divergence on this pair to show that we're about to reverse. Only when we start seeing signs of reversal, we'll start looking at for upside. But sometimes when you get an impulse, when you get, maybe if there's fundamental news, like the calendar this week is filled with a lot of fundamental news, you get a strong impulsive move in the direction that we're looking for. So this is what could happen. Doesn't matter where. If it's here, you can get a strong impulsive move here, and then it starts doing this. If it does this, then we know that we are ready to reverse. So don't worry about missing this. This is small compared to all these pips that you're gonna get here, and your trade is more probable when it's like that. Okay, so that's what we'll look at here. But if it keeps going like this, and it starts doing this, then we know we're gonna have to change the count, and the structure will have changed. Then we're gonna label it something else. Okay, so now this 1, 2, 3, 4, 5 is no longer gonna be valid, and here's the reason why. Because this 1, 2, 3, 4, 5. Let me just undo and show where it was. You can see that this is a 1. So if this was a 1, it was supposed to start here. So wave 2 would have been this one. So you can see here that wave 2 has touched this line. So basically, the fact that this has touched this blue line has just invalidated this wave count altogether, because you cannot have a 2 going or not even touch the start of wave 1. As you can see that wave 1 starts here. Wave 1 starts here. You cannot have this. So that wave count cannot be valid. So we need to change it to something else. Okay? So maybe that wave 1 will start, if it goes up as an impulse, that wave 1 should start here. Okay? Then you'll get a 1, 2, 3. And I'm just labeling it a 1, 2, 3, 4. It doesn't mean it's going to be 1, 2, 3, 4, 5. It can be a double XY. Okay, so this is just speculating, but it doesn't matter what it turns out to be. All we know that it's going to go up. The only thing we don't know is the type of pattern it's going to make while it's going up. Okay. All right, so that's New Zealand US dollar. So let's look on the lower time frame. Just go to the 4 hour. 4 hour time frame. So you can see here, it looks like it's still making this flag here. Still making this flag here. And if it does this, and it makes sense because the Euro US dollar is also going down. So you'll anticipate that we may still get the flag. When Euro US dollar breaks down, this will also break down with it. But we don't know how far at this stage. Okay, so let's keep an eye. It is actually risky to sell it at these low levels now. Okay, it's too expensive to sell it there. Okay, so remember the rule: you buy high, you buy low, sell high. So here you don't want to be selling low. You want to sell high. Okay, so here it's too low to sell. All right, so if we just go to the 1 hour time frame, just want to see what it's doing on the 1 hour. Okay, so this was the initial projection that I had. So divergence will need to guide us here to see when we start reversing. Here, it looks like we're starting to get some divergence on the 1 hour, but I prefer to get the divergence on the 4 hour. It is more reliable. So here, we could be just getting something like that. You could get a 3-wave up, and it just does something like this before it completes that short move to the downside that we're expecting on Euro US dollar as well, and the move we're expecting on US dollar JPY. We're expecting the same move on the dollar index. So you can see that all this analysis correlates with everything that we're looking at. Okay. So next one to look at is gold. So we're looking at gold now. Okay, let's go to the daily time frame. Go daily. All right, so this is gold. All right, so I always tell everybody who's watching this webinar, forget about all this labeling. Focus on the structure. Okay, so that's why I just switch it off. Now we're going to look at this structure. Okay, so if I just switch this on, just switch it off. All right, so you've got this big impulsive move to the downside here. And everything here is just a corrective structure. This whole thing here is a corrective structure. All right, so how are we looking at this corrective structure? I'm going to go to the 4 hour time frame and do all about 3 degrees on this structure, 4 hour. So remember, this is your impulse, and we're going to label now the correction. If you go to my video first, I think the first video was on the 23rd of July. You'll see I went through this chart. All the degrees were covered. So now when you get a chart like this, where do you even start to label? This is what you do. Identify the impulse and what the correction is doing. So you've got the impulse. I like to make the impulse with yellow. So this is your impulse. Right, so here is your correction. How do you label this? Okay, I do not care about how to label it. I need to understand what structure it is forming first of all. Then when I know the structure, labeling comes second nature. So here, what I'm seeing here is this starts a shift from the bottom to the top here, and I've got this deep correction here. Okay, and I'm anticipating that I will get something like this here. I will get something like this. This will be something equals to that. Okay, so I'm anticipating. So this is the higher degree. Okay. Actually, I should have done that in yellow. Let me do it in yellow. There's a reason why I want to do it in yellow. I want it to be clearer. Right, so correction, just remember this is a correction in yellow. and we want it to be this to be equals to that. Okay, so under the yellow degree, we've got another degree. This one is okay. Before I do that, let's label this one. We've got a WXYZ here, WXY. Okay, no, not like that. WX. Your Y will be somewhere here. It's basically an impulse and an ABC. Okay, the reason why we're calling it a WYXY is because there's no 5 waves here. If you see 5 waves, let me know. All right, so there. That's a lower degree. It's a WXY in lower degree. This red is just a lower degree of this W. And if you wanted to label this, you just label it like that. That's how simple this is, WXY. And we just go through the motions doing the same thing. Here, WXY, lower degree than that is the red. Okay, what is happening here? Red, red. Where does this red end? That's what we need to find out. We don't know yet, but we know when it ends, it needs to complete the Y. This Y here. Okay, so now we keep going. Degrees. Degrees, to spot degrees, it's all about experience. You can see here, I've got a green degree. That is just one lower than the red, WXY. Same thing, okay? WXY. Okay, I'll have the same thing here. I'll have the same thing here. This will just be going 1 degree lower, 1 degree lower, 1 degree lower. Okay, this one looking at the degrees, something like this. See that? See that? So now, this is a possibility that gold will be a buy. See how simple this is. I'm just going through the degrees. Gold will be a buy around the 1244 area. That's what I'm anticipating to buy. So here I just have an impulse in the WXY. Simple. Okay, so you need to be trained to be able to identify these degrees. Okay, all you're having here is just zigzags. This one is just connecting in zigzags. And if we were to label this, you're going to label this as, okay, let's do this, WXY in green, WXY in green, WXY. See how tiring this is? It's boring because you just keep doing the same thing. Same thing. But I only have to do it once, because once I've done it once, the only thing I need to do is, as the market unfolds, I just make adjustments. So what am I anticipating? I'm anticipating that here, and you can see here it's making this flag. Because it's making this flag, I'm anticipating that it's going to make this drop. What does this confirm? It's confirming the drop, that last drop on the Euro US dollar, that we're going to have another drop to come and complete this. So any pair that has got a US dollar on it, so remember, gold has got a US dollar, it's XAU USD. So as long as the US dollar is the quoted pair, so we're anticipating on a drop on all the pairs with the US dollar on them. So basically, dollar bullish on everything. So you see how complicated this is. It is only complicated when you do not know the rationale. That's why these labelings will look like it's cluttering the chart. That's why I do not focus on that. I focused on the structure and I just put on the letters onto the structure. Okay. All right. So I'm going to remove all of this and just show the clean labeling on the chart. See here. All these letters, I've got the highest degree, which is the yellow, and then I came to the red degree, which is the lower degree, and then I came to the green degree. Right now, I'm on the green degree. What am I anticipating? I'm anticipating that the green degree will continue to the downside. Easy. So if you get this, it's risky to sell it there because we're already very low here. We're already very low. Okay? And then, but it looks like we still have quite a number of pips to the downside. So my projection was initially around 1244. It can even be lower to even 229. Okay? But it doesn't matter how far it will go, the market will show us. How will it show us? You can see here we get a nice 3-wave here. 1, 2, 3. I wouldn't be surprised here if we get this dropping. And all this is just a 3-wave structure. And then we're going to be buying somewhere around here. But for now, just keep on taking these cells. Keep on taking these cells. The dollar looks very, the US dollar looks bullish at the moment. So that is gold. All right, and now let's come back to the ZAR bit. I'm doing all the pairs with the US dollar on them. US dollar ZAR has changed the structure. And it looks very interesting. After doing this one, I'm going to do pound New Zealand, because what is happening to the rand looks exactly the same as the pound New Zealand. Okay, but maybe let me do pound New Zealand first, and then we come to this one, because pound New Zealand has already completed the structure that is being currently happening on the US dollar ZAR. So let's look at US dollar pound New Zealand first. I'm still going to do all the pound pairs. Okay, so let's just look at this one here. Now, after learning all those patterns, this is a textbook example of how you can apply all the patterns that you've learned in one chart. Okay, for the benefit of those that did not watch the previous video, okay, I'm going to do this once more again. So you see here, we've got an impulse. After the impulse, we get a corrective structure, 1, 2, 3. Right, we get another impulse, but this impulse now is within. Let's do this. This impulse now is in red. We're going to make this impulse in a different color to show that this is a different degree. You see, we've got a 1, 2, and underneath here, we've got a lower degree, 1, 2 again. Okay, and I'm going to do this one in pink. 1, 2, 3, just to show that it is in a different degree to this one. Okay, we get another green impulse. Green impulse. After that, we get a pink correction. Let's do it properly. But my mouse was behaving quite nicely today. Right, 1, 2, 3. After that, we get another green impulse. Right, so switch this off here. After the green impulse, we are anticipating a pink one again. 1, 2, 3. Right, so here, this is an exhibition of all the of all the types of corrections that we learned. So here you can see here, this one breaks the top, breaks the bottom. Expanding flat, we've learned this one. This one here does not break, ends here. Regular. This one here breaks the top, breaks the bottom, expanding. This one here, regular, does not break, regular flat. So we thought after this one, after this correction, this one is gonna go like that. Okay, but it did not go, it came back again. And when it came back, we could see that it was doing something like this. Okay, so now that changed like this. So now this correction changed to be something like this. Impulse, another impulse within this correction. And then after doing that, we got the green impulse. Okay, so now how do we label this? Let's do that. So now I've got an impulse, wave 1, correction, wave 2. And then I get another one. Within the wave 2, I get a 1, get a 2. Get this impulse, giving me a green 3. See, this is still within this one. This is a higher degree. Okay, after 3, we get a 4. After a 4, we get a 5 in green. Okay, so remember this 1, 2, 3, 4, 5 is still within this yellow one, and we still haven't even gotten the 3 of the yellow. So this Y5, this one, this wave 5 in green should be completing the 3, which means here we need to get a very big sideways consolidation, same way we did this sideways consolidation, but this time this one will be completing a wave 4 before we complete the wave 5. So you can see that the pound in New Zealand is still bullish. Whatever is going to be happening now is just a sideways movement to complete a yellow wave 4. All right, so you can see that this one is a primary, that's why I'm putting it in a circle. Okay, it's easy. It's easy when you understand these degrees. All right, so that's how I'm looking at this one now. I'm not interested in the sell on the pound in New Zealand. We know that it has reached the cycle for up to the green wave 5. Okay, I'm going to clear everything. So I'm not going to be surprised at all if it starts doing this sideways movement here. You can see here how long it took as well. And we got this trade, I think about 600 pips in 2 days here, because we understood this pattern. All right, so let's go to the US dollar ZAR and see the similarities here. So for now, I haven't got a new trade on pound in New Zealand. I'm not looking to sell it because even if it has reached this cycle, I'm not looking to sell. I haven't got any sell set up on that pair. All right, so let's go to US dollar ZAR. US dollar ZAR. Let's go higher time frame, daily. Right. Okay. Always do the same thing. You can see the impulse. Right, after the impulse, you get a 1, you get a 2, you get a 3, you get a zigzag. After that, you get what looks like a connector, 1, 2, 3. Okay. After that, we were anticipating that we're going to get another zigzag. Okay. And I was thinking that this is making this again. I thought it was making this again. You can see that it looked like it was making exactly this. Okay. So I thought that it was going to do something like this, give us another corrective structure, and give us another drop. And then that will give us AWXY before we resume and move higher. Okay, so this one like that, 1, 2, 3, 1, 2, 3, connector, 1, 2, 3. Right, you can see here we're getting a triangle which didn't play out, but this is how this has changed now. This is why it is important to always anticipate. Okay. If you remember pound in New Zealand, we had an impulse, and after having the impulse, it gave us this correction. 1, 2, 3. Okay. And then after that, it gave us that green one. Remember the green one? And I called the correction within the green. I made it in pink. You see, as much as Elliot identified the patterns in the theory, there are some patterns that happen in the market that have not been identified, but you see the similarities from one chart to the another, or one pair to another. All right, so this is what is happening now. We had the impulse. You can go back on the video and check what we were doing with pound New Zealand. It's exactly the same here. So this is what I was anticipating. We got another green impulse here. But this 3 has not reached the level that is acceptable according to the rules to be a wave 3. If you saw one of the previous videos, I said wave 3 must be at least at 1,1618 extension of wave 1 through to 2. And it has not reached that. It's still short by a few pips. It needs to be here. So we might still get a push up to there to complete a wave 3. So once that wave 3 is completed, we should get something like a wave 4. We don't know what the structure of wave 4 is going to play out as. We don't know what this structure is going to play out as. It can be anything. Triangle, flat correction, doesn't matter. But all we know is that once this correction is done, US dollar ZAR we'll be completing wave 5 of wave 3. Look at us run away now. Let's just place it there. Right. Wave 4, wave 3, and we still have wave 4 to complete. Exactly the same thing that we're anticipating on pound New Zealand. Okay, I'm going to show you where pound New Zealand is now. I'm not saying there's a correlation, I'm just saying there's similarity in the way this is played out. Let's get the yellow, and then that wave 5 will then be completed. Pound New Zealand has completed this one here. No, actually this one. We just traded this move on pound New Zealand. This move is the one that we have completed. Now we're waiting for pound New Zealand to complete this one. Now here we want US dollars to give us this move. And when it gives us this corrective structure, then we are going to be buying it on the breakout. Okay, so for now, let's see how it plays out. Alternatively, this is my bias and my preference, but it doesn't matter. I don't trade with the bias. So once you start trading with the bias, you're going to lose trades and you're not going to change your mind when things change. So you need to let the charts tell you. So right now we are getting this strong impulsive moves to the downside. I'm going to do it on the 4-hour chart. Okay, I am on 1 hour now, running the webinar for 1 hour. Obviously, we spend the first 20 minutes doing that those corrections. So yeah, you've got this impulsive move to the downside. I prefer to do it in yellow. Impulsive move to the downside. Okay, it gave a small flag here. It's actually not very small if you do it on the 1 hour time frame. You can sell this short term. You can see how clean that flag is. It is too risky for me to sell this. It does not have enough impulse for me to take the sell. I would have preferred that this be a little bit strong, and then I'll get a strong correction like this. Right now, anything can still happen. This thing can still shoot to the upside. All right, so US dollars are for now. We watch it and see how it plays out. That's the 1 hour. Okay, so that's US dollars are. Also, we've done Euro USD, the dollar index we've done. Let's do the pound pairs. Let's do all the pound pairs quickly. Pound pairs and the euro pairs. Right. We've already done pound New Zealand, so we're not going to repeat it again. So we're going to start with the pound Audi. Long-term trade. Okay, so this morning we took the breakout of this flag. Okay, but what are we looking at here on the higher time frame? Okay, on the higher time frame, we are still anticipating, we're still waiting for this to do a 3-wave move like this. Okay, so this is your impulse here. Sorry for not being consistent with the colors. I usually do the impulse with the yellow, so you can see that it's the impulse. So this is the impulse that is being corrected here, and you've got a WXY that still has not been completed here. You see here, WXY. So this is not completed here. We're getting a flag here at the moment. So a flag is a continuation pattern, and it's telling us that we still have a move to the upside to complete this. Does not happen in one day, but you can see here how strong this happened here, and it gave us this deep correction here. Okay, so we are still anticipating that we'll go all the way there, and that will possibly get to that area. And if it does, then we're possibly going to be reversing there. And reversing there will be giving us another pattern. So, and what kind of pattern will that be? Just to show how you will always have something to trade. If you're getting that is a 1, 2, 3, possibly a regular flat, and after a flat correction, you drop. Okay, remember this is your impulse. This is your impulse. Let's do that. Let me undo it. And switch off this. Let's clear everything. Remember, this is your impulse. This is your impulsive move coming from somewhere there. So your impulse there. After the impulse, you got this 1, 2, 3. Then are we getting, and that you can call an X. This is just high level to show you how we analyze. Okay, and then you get another 1, 2, 3. You can see that this is a connector. And that is your X. And now we are waiting for this to give us this move to the upside. Okay. All right, so this can be in the same degree as the other pattern, just that this one is going to be a zigzag. And this is how we're going to label it, W, X, Y. You can see that we've got two types of corrections here. We've got one, call this one an expanding flat, breaks the top, breaks the bottom, connected with a unit connector, plus a zigzag, WXY. So that's where the WXY comes from. Right, so that's pound Audi. Let's go to the next one. So pound Audi, we are looking for upside. Looking for upside, obviously, because we want the sequence. That sequence is not completed yet. And we took this right at the bottom here. We're still gonna ride it all the way up. All right. Pound New Zealand, we already did. Pound CAD. Simple. Pound CAD is quite simple. So for the last 3 weeks, we were never selling the pound. Never selling the pound. We were just buying the pound. And group members made a lot of money with the pound. Okay, so this one is quite easy. I'm just going to switch this one off and do it very simply. Impulse. You're getting a correction A, B, C. Okay. Sequence is still not done on this one. Still need to get there. Okay, so that's the 4-hour chart. Okay. Let's just clean it up. That's why you're getting a flag here. Getting a flag here, you can see we've got a strong candle here to show that we still have more upside. And we're targeting 1,73 on this one. We're currently on 169. So there's still over 300 pips on this one to go. Not yet done. Okay, so you can see here, I've got a stop loss for the premium group members. When we send the trades on the premium group, on our group, Telegram group, we put it with a stop loss and the target. So you can see here, we just put in the target under the flag, and this thing runs. Okay. Right, that's pound CAD. Next one will be pound US dollar and pound chief. Let's do pound US dollar. Pound US dollar. It's a little bit tricky, this one. Okay, so this is the possibility here. So here, we already have this impulsive move, 1, 2, 3, 4, 5 in red. And then it's been corrected by an A, B, C. I'm anticipating that we're going to give some strength. If you get something like this, it will be even better. Some strength on the pound to go and complete the B before we get the move down. Okay, let's do this. Clear it up. All right, so we still need to complete that wave B. Should do something like this, break out of this correction. If it gives us a flag like this, we know short term the pound is it's a bit strong. Okay. And then if it comes and takes here at the top, and then comes down and does this. You can see this will be an expanding, a regular flat. That's a regular flat. Okay, for now you've got this impulse within this pattern, within this correction. If it starts giving you a flag, this is the 4-hour chart, go look for a flag on the 1 hour. Flag like this, you may be getting something like this. I don't know how far it will go. It may even turn somewhere around here, but we'll see how that one goes. Okay, so short-term bullish pound. Pound chief, you will see the similarities, but pound chief is a little bit ahead of pound US dollar, because remember the impulse that we had on pound USD. This is the impulse. This is the impulse, but now the A on this one has already been completed, and this one is already tagging the top here. Okay, so if it's tagging the top, let's look at the divergence. You're starting to get some divergence here as well. This is a 4-hour chart. So if it's taking the top, then it may be ready to come down to give us that C. Okay, so let's see how it goes. Even if it doesn't just take the top and breaks it a bit, it will be an expanding flat. But what we will look for on pound chief, very interesting. This one is actually quite clear. You can see you're already getting that bearish candle there, but we don't just trade candles. We want a impulsive moves down and a sort of a flag like this. And this will give us this trade, which is about 130, 127, about 300 pips you can get here, or more if it goes all the way. That's pound chief. Next one is pound JPY. Let's do pound JPY. Okay, pound JPY, same thing. Pound JPY, we've got the impulsive move. A, we are currently in this B correction here. Same with all the other pound pairs. We're currently in this B correction here. So we need to see if it breaks down here. We know that that correction will be done, and then we'll go down here. But I'm still anticipating that we're gonna get some more up. Maybe come take here. As you can see, all the other pound pairs are still bullish. And I am also bullish US dollar JPY short term. So this may be the same move that will go with the yen pair as well as the pound pairs. Okay, so that's pound JPY. And lastly, I'm going to do a few yen pairs like this one, Euro JPY. So Euro JPY, very clear structure, and you'll see if I'm I'm gonna do the Euro pairs now. I'm gonna do the Euro pairs because there's something interesting here. You can see here, this one ended the cycle. Let me just show that cycle. Switch everything off. Go to the daily. Okay. This was the big impulse, long-term impulse. And from there, we anticipated that we're going to get a 1, a 2, a 3. All right, so this one has ended the impulse here at the top. And you can see that nice reversal there. So at the end of the impulse, we know how to anticipate a reversal. And this is what we're getting right now. Okay, this is the daily time frame. I'm going to go to the 4-hour just to show this pattern here. And this pattern has happened on another Euro pair. So this one is going all the way down. Okay, the euros are actually going down. All the euros are bearish, are looking bearish. So at the end of the cycle, this was the end of the cycle, you got this impulse to the downside. And you got this correction. Okay. This comes and takes here. And you go all the way down. So essentially what you have here is that long-term impulse another impulse to the downside, and the corrective structure that comes and takes the top here. Okay, when it takes the top, we're already anticipating a regular flat. Okay, so we knew that that was done. 1, 2, you can see that we've got a 3 here at the top. All right, so either this can give us this regular flat and reverse, or this 4 hour. You can see that it's already going with a strong impulse to the downside. Every time you get a flag like this, keep selling. Keep selling this flag all the way. Okay, keep selling it. All right, so that's how Euro JPY looks. So just remember this structure that I'm doing here. It has happened before, where you get to the end of the cycle, you get an impulse down, you get a 1, 2, 3. I didn't do it properly. There's clear. Where you get an impulse down, and then you get a 1, 2, 3 waves. Somebody can ask me, why did I skip this string here? Why didn't I say 1, 2, 3? I'm looking at the degrees. I'm looking at the degrees. Okay. So it's an impulse, 1, 2, 3, impulse. All right. So if that is completed, then we're going all the way down. So if you look at Euro GBP, you will see this exact same pattern has happened before. Here it's happening on the 240, but here it was happening on the 4 hour, no, on the daily Euro GBP. Don't forget this pattern, because I'm gonna be showing that's exactly how it happened. So look here, daily. I'm gonna go daily. This is how we know and confirm reversal, because we understand the patterns. You see here, this one, that was your impulsive move. What does it do? It makes an impulse in the opposite direction. What does it do? Gives you a 1, 2, 3. Okay, after the 1, 2, 3, exactly here where it touches here, the end, that's where it reverses. Okay, so we actually took it right there. We actually took this cell right there. So now it is all going all the way down. Okay. Finish this corrective structure. Should have entered this one by now already. So the same thing with the Euro JPY. Any correction that you get, keep selling. This is now bearish. Okay. See this structure? It's exactly the same as you've got on Euro JPY. Okay. Look for these flags or corrective structures in the lower time frames. Another one, Euro Audi. I'm going to go through this one quickly. Euro Audi and Euro New Zealand. You see here, same thing. We had this impulsive move here. There's a daily. Okay, so this thing is called scrolling up. I'm getting a red color. Scrolling up, giving us this correction AB. See here, which looks like it has reached. Actually, it has reached the end of the cycle here. So we're anticipating reversal here. So what we want to happen here is a drop and the correction in the lower time frame. Let's go to the lower time frame. Okay, you can see here that I've removed all the labelings. So I'm just going to go to the 4 hour. Remember what I'm looking for? I'm looking for a strong impulsive move to confirm reversal. And we've got it there. You can see a strong impulsive move. This should not bother you that this is not reversal. That is not reversal. You need to know. So you've got that. You could get something like that. Gives you that. That's 3 waves before it goes all the way down. Okay, so what does that give you? It just gives you a simple 3 waves. 1, 2, 3. You go all the way down. Right now it is bearish. Okay, it may go up, maybe even to the 50-61%. Okay, so it will be even better for us who, if you missed it right at the top, it will be even better to take it here. After all, that is the reason for retracement, is to give those who missed the chance to also get in on the bus. That's Euro New Zealand. Same with the Euro Audi. Euro Audi. So Euro Audi. You see here, this is the end of the cycle. Oh no, I'm not like that. All right, so this one, this is our wave last impulse here, all the way at 5. Okay, and then this thing is correcting like this. 1, 2. You can see here it has tagged the top, so we may be going for a expanding flat all the way down. Okay, but we need clues. We need clues whether what we are anticipating will happen or not. And there is a clue. We're getting a flag, textbook flag. Okay, when this breaks, take this straight. It's going all the way down. This is going all the way down. When the break out of this, take this straight. It's going all the way down. Okay, that's Euro Audi. All right, so I think we've done all the Euro, I think all the Euro pairs. Euro CAD is a similar structure. CAD Chief for interest. This one is just to show how we trade fundamentals. So to answer those who've been asking whether I trade fundamentals, yes, I don't trade fundamentals, I trade the charts. So whatever the results or the news, we'll find the chart ready, because after all, the chart is an incorporation of market data. Look at this here, you've got another trade going, but the problem with this trade is that it goes slow. It goes very slow and can be very frustrating. You see here, you had the flag here, just had to sell the flag. This was day before, what was happening with the CAD? Yeah, it was the CAD interest rate decision. Okay, I didn't know what the result was going to be, so I just posted the chart that a break of this, we're going all the way down. And immediately, as soon as the rate decision was announced, this is exactly what happened. It dropped all the way down here. But it has been taking away all those gains again. But look what it is doing. It's just doing exactly the same thing that it has done before. This is not reversal, it's correction. So that's why you can see it's breaking down. You can even take this trade right now. This trade is ready, you can take it now. The stop above here. This trade is ready. You may even get something like this. It goes slow, this trade. You can see here, it drops, reverses, drops, reverses, big drop, takes off all those gains, drops again. But if you're patient, you can get this trade. It's as slow as it is. The reason why I'm trading is it's one of those clear setups. It is slow, but it's clear. I know even if it's slow, it's going to play out. And my target is 176.44 there. And this is the reason why I'm taking this one. And just another bit on the education side here. You can see here that we've got the impulse, and this is the wave 5 in yellow. This thing ended in wave 5. And after wave 5, we had the corrective structure 1, 2, 3, 4, 5. That's the first wave. First correction, I mean to say. Then after that, I've got the connector. Switch this off. All right, so I've got the connector. All right, so after the connector, what am I anticipating? Another correction, and that will give me a WX. Why? Simple. This structure is very simple. But when you look at me doing all these WXYs, it's not it's not as straightforward as that. You need to apply the rules. For example, right, so let me just show you why you cannot just take this on the surface. Okay, there is a rule for the retracement of this. If this is the impulse, this has to retrace to a certain level of this. This one has to go to a certain level, and it is the 61% extension of the move from this to through here to there. Okay, so if I go and take my fib tool, my fib extension tool, you'll find that this one is exactly the 61% extension of this one up to there. Okay, I know I'm doing it a bit too fast here, but you can go and verify this thing. So I'm just showing you, if I switch this on, ooh, my chart is all cluttered up. Let us do it like that. So I hope you can still see that this is my W, this is my X. 1. Okay, let me do it with the lines on. 1, 2, 3. The connector, we count it as 1. And then I'm getting here a 1, a 2, a 3. There is a level where this should be. I know where this level should be, and this is what we anticipated. If I take my fib extension tool and I start it from right at the top to the bottom and back up, this one ends at the 618, as you can see. Okay, so there are rules for this. It's not just WXY because you see WXY. That's just the direction. There's still a way to trade these things. Okay, and that is what I teach the guys in my courses. All right, so Corrective Jpy, as I said, it's slow, but it's a very clear setup. You can take the trade, you can take the sell now. All right. Audi Jpy. Remember, AJ asked for Audi Jpy. Let's do Audi Jpy. That will be the last of the yen pairs. Okay, today we're going to run a bit over time because of the 20 minutes we spent doing the training. So Audi Jpy, if I just switch this off here, 4 hour. Right. So Audi Jpy, this is what you need to look out for. Just need to look out for flags to complete this 1, 2, 3. This sequence is not done. We just want this to be equals to this one here. You need to get equal legs up to here. Okay, so this whole thing will be giving you your impulse. And then after that, you're getting a 1. You can see this one has already tagged this here. May come down and tag the bottom. All right. So if it takes or breaks, that will be an expanding flat. Here it has already broken it. Any reversal here will make it a running flat. Okay, but I don't anticipate a reversal there. Still believe Audi is bearish. Okay, so we're going to come here. If you get a flag like that, you can sell it all the way down to this area. But you must take profit quickly here. You mustn't keep these trades for long when you do get them. This is the 4-hour chart, so yeah, you can look for flags on the 1 hour as well. If you just go to the 1 hour time frame, you can see you're already getting flags. Flags like this are opportunities to sell. Flags like this, flags like this, flag like this. Every time you get a flag like this, it drops flag, it drops flag, it drops flag, it drops. Okay. All right, so that's Audi Jpy. Oil. So oil has done what we've been saying all along. If you watched all the other previous webinars, I always end with oil, Bitcoin, and S&P 500. So oil, we've been anticipating that 53.8 target, which has been reached. And this is how we reached that target. This was the analysis on oil. can see the big impulse all the way coming from right at the top there, and a simple 1, 2, 3 WX. Right, so we're still anticipating that, okay, this is going to be like that. We're still anticipating a Y there. But right now, it has reached this in the lower degree, 1, 2, 3. I'm anticipating a bit of a deeper correction on oil before we resume another leg up. Okay, and this will be a WXY, 3 waves in the lower degree. Okay, that's how we forecast. So right now it has reached this. We've been waiting for this, for it to reach this. So you need to get a correction. You can only buy oil if you get this deep correction here. Okay, so that's oil. And then S&P 500. S&P 500 just keeps on going and going like the other indices. They just rocketing and rocketing and rocketing. They just keep going higher and higher. So the only time that this will drop is when we start getting divergence. And if you put on this up here, you can see here they're getting higher highs, higher highs. Only now the indicator is, the MACD is starting to make some divergence. This is still going up, but this the indicator is starting to make a divergence. And this is on wave 5 of yellow. So on the S&P 500, just take this off because it's not on that channel. You'll be anticipating to get something like a drop any moment. It will drop any moment. And when it drops, get a flag, then you sell it all the way, maybe down to the trend line. And then it will give you an A, maybe a B, and then a C to complete that cycle. Okay. That's an hour and a half through the webinar. Thank you very much for joining up. If there's any pair, just one more pair that we can analyze here now. Otherwise, we can always do it with the recording stopped. So this is the end of the webinar, and hope you trade responsibly in the week ahead. Use risk management. If you're watching this on YouTube, you can post your comments. Maybe just to, if you want to get hold of me, this way you can get hold of me. First of all, my email address. I want to see if I can get a text that I can use here. Okay, I can't find the text. I'll just write it down. So my email address is vmanena at gmail.com. For any course inquiries, you can email me on that number. If you prefer to call, some people prefer to actually talk to the person to see if the person is real. Somebody actually said that. So I am a real person. You can call me on +27. This is an international code. You can dial it exactly like this on your mobile. 827966324. I use this number on Telegram and WhatsApp and for normal call. All right. So also we've got this group here. Just want to pull it back. I hope you can see it. I'm going to clear now. Got this group here. It's called Trading Waves. I just want to see if I can show the address. So this is the group here. It's called Trading Waves. That is the group name. It's a channel name on Telegram. This is where I usually post 1 or 2 charts for free on Telegram. It's t.me/Trading Waves. You can go to that group, and then on Facebook, let's see if you can find me or put it on Facebook now. This is what it looks. This is what my profile looks like on Facebook. Hope it's going to load faster. And then on Facebook, this is my profile. My name is Ndibuo Victor Manena. You can check me out there. All right, so this is my name there. That's what you'll find on Facebook. My profile has got this poster for the next course. Just talking about the next course is in Senten this weekend in Johannesburg. Okay, and then we've got the online course that will be starting next week from Monday until Thursday, starting from 1600 to 1800 GMT. Okay, so that is my profile on Facebook. This is the name if you want to search for me there. Okay, so many social media. We are spoiled for choice these days. All right, so I think that's all you need to know. Oh, there's also the group that I usually post updates. It's called Peeps Exclusive Forex. That's where I post the chats. But otherwise, if you want to get hold of me, email me, send me a text on Telegram or WhatsApp, or you can call. That's where you will find me. All right, so this is the name of the group, Peeps Exclusive Forex. You can like the page. All right, you can also like this video here if you learned something. All right, I'm going to stop the recording here. I hope you enjoyed the video. Thank you and have a wonderful trading week ahead. Thank you. Cheers. Bye-bye.